Good day, traders. Today we're going to be talking about how to trade part-time while working a full-time job. Great question from trader in England, and I've had this question repeatedly asked, and today we'll cover this. We'll look at some approaches, and hopefully this will help empower you to maybe increase your focus and narrow down some specific goals. But if you only have a certain window of time available to trade, and again, there's traders from all over the globe, different time frames. I've talked about the timing windows, and today we're going to demonstrate that you can trade pretty much at any time consistently and probably have lots of trading opportunities. The first question that I would ask any trader is, what is your goal? What is your goal with trading? And that may sound like a ridiculous question, but the reality of it is when you ask that question of a trader and they say, well, of course I want to make money. And I would say to that trader, well, what is your setup that you make money on? And of course, 90% of the time traders will tell me, well, I go long when I get this and I go short when I get this. And I really have to hammer this home, and we'll go over this today. Understand what a best trade setup is, and understand how powerful that can be if you really specialize and narrow down on some simple best trade setups and how you can grow those. So first of all, what is your goal? Is your goal to just, make some extra cash, or hopefully, or you want to understand the market better, or you're just trying to, you think it's the ultimate mental challenge to figure out the market, and you just whatever that is. My goal is to make money. That's the bottom line. I don't care how I do it. I don't care if other people think it's wrong. I could care less. My goal is to take as much money out of the market as possible. That's it. I love the story about Dorian Yates. His nickname was the Shadow. And if you don't know who Dorian Yates is, go and read about this gentleman. He was, 5-6 time Mr. Olympia, something like that, but probably pound for pound one of the most densest, incredible bodybuilders of all time. And if you know his story, he came from council projects in England and basically had nothing. He was in trouble as a youth, but he turned his life around and became one of the greatest professional bodybuilders of all time. And synonymous with Arnold. I mean, you say Dorian, everybody knows who you're talking about. But his ability, he said one of his biggest challenges was to actually believe that he could become that somebody from where he came from, internally, the self-belief that he could actually really do that. And he overcame all odds. But again, just briefly, his nickname was the Shadow because he would train in a little dungeon in the UK. It had mushrooms growing out of the wall, broken toilet seat, just steel weights in the basement of a building. And he said he loved it because it was everything that he represented, that he came from. And he said he didn't want to be in LA training, living on the beach, driving fancy cars, hanging out with beautiful women and partying all the time, because it would distract him from his goal. And his goal was to be the greatest of all time. And he would show up, walk on stage, and literally that was enough to win. He was that good. And he would walk away, collect his check, and walk away. And so they called him the Shadow because he would show up, collect his check, and walk away. And that is my approach to the market. I don't care. I'm gonna it's guerrilla warfare. When the iron is hot, I'm gonna strike. And my goal was to build size on these certain setups to where I strike, I grab my money, and I'm gone. And I'm not gonna hang around to try and show the market how smart I am or impress other traders or anything else. I want to lock it in and walk away. So the question is what is your goal? If your goal is to make money, then you have the opportunities. Time-wise, you may be in a full-time job, but you still will have a window somewhere potentially. And if you don't, well, then there's going to be some challenges. But secondly, you need to be very organized, not only with your time, but with your mindset and your approach. So again, coming back to that first question, what is your goal? If your goal is to make money, then get super serious on how it is you're going to make that money and only focus on that, and then gradually potentially grow some of that playbook trade setups to increase your opportunities, and we'll talk about that in a second. And thirdly, you need to be very consistent with your time, very consistent with your approach, and again, that approach has to have edge. I said this the other day, if you don't have edge, don't trade. Only trade if you have edge. So the first thing that I would do is to identify 3 best trade setups. A short trade setup with some variations, obviously, a long trade setup, and a trend trade setup. Recognizing when there's a short opportunity, it may be a market that's overvalued when your window shows up, and there's going to be a correction. You want to be able to take advantage of that. It may be short, it may be long, and it may only be a 15 to 25 pip trade, but that is a powerful opportunity if it shows up consistently. Nobody gets a free lunch in the markets, and I say this over and over again. Somebody's in the money in one direction or the other. Now, you can be trading in an all-in day, a trend day. So if that's the case, you may want to have a way to identify that trend trade, and there may not be a trade setup that day. So again, the 3 things that you're going to have an opportunity to do is to buy, to sell, or to do nothing. And if you're trading part-time, this is key. Really understand the power of scalable setups. I got a comment the other day from a trader. They were up 30 pips and they ended up getting stopped out at break even. And my question for that is, you were up 30 pips, 30 cents, whatever that is. Why wouldn't you have taken something off the table? Like 10 to 25 pips a day, 2 to 3 times a week. If they're your repeatable best trade setups, can be compounded. You can grow that. You can use that to gradually scale up in size. You can really empower your trading account. Lock in profits. If you're up 30 cents and you don't take anything off the table, you need to stop and look back at why, what you were doing in the trade. Maybe you're holding on for 50 to 100. I don't know. But still, you're up 30 pips. You should have locked in some money. So it comes back to number 1 again. What is your goal? I would rather get 15 pips with size than 100 pips with no size. I want to make money. That's the bottom line. So, number 1, identify your 3 best trade setups, short, long, trend trade. Understand them in every little nuance, variation, and presentation that they can come in. Master those setups. Then you want to be able to identify the instruments that may offer you those trade opportunities. Following 5-6 instruments. Somebody said to me today, I see you were following the pound, now you're following gold, then you're saying oil and NASDAQ and blah, blah, blah. Understand this. I will trade my setup on anything when it shows up. It's the setup, but certain instruments are giving me those setups recurringly, and they have certain behaviors that show up over and over again, so I'm going to keep trading them. Just because I traded something before and I'm trading something else now doesn't mean a thing. It's the setup that I'm trading. So rather than sitting around, for 3 hours to get something on the pound, gold, NASDAQ, oil moves all the time. So I can leave for 3 hours, come back for an hour, or I can get something right at the open of the session. It doesn't matter. It's the setups that I'm looking at. So I'm looking at instruments that offer me the opportunities. If it's the Swiss franc and it's been level 3 and, it's dropped down and broken and it's going to give me a 25 pip move with 0 resistance, I'm going to try and size into that and take advantage of it. So you want to be able to have instruments that are going to, over the course of the week, give you 3 to 4, maybe more. But if you're getting 3 to 4 really good opportunities per week, again, coming back to that first part, those are scalable trade setups. That's enough to really start to grow your account. So the idea with compounding that account on scalable trade setups is that at some point, potentially in the near future, which I'm sure a lot of people's goal is to potentially replace their income at some point, their job income, that's how you can do that, by repeating the process over and over with scalable opportunities. You can grow your small account slowly. Understand the power of compounding growth. I just talked about that. Scalable setups. It might be 15 cents, a 15 pip scalp that shows up 4 times a week, but you have zero heat. You get off the screen, you walk away, you come back the next day, you do it again. That's how simple trading can be. That's a mental barrier that retail traders have. They think they need to be at the screen trading all the time and trading this move and trading that move and catching this move and catching that move. And it's like, no. I have setups. I'm going to the screen to look for setups. Now, I've talked about this. I'm more prone to taking short trades. I'm really good at taking short trades. I'm getting better at taking longer trades. I just take them and I don't go in as much size. I like to take the long trade with less size and then pound into the short trade when it comes back. That's just me. And then I'm done. So, I'm not worried about trying to master long trades. My goal is to make money. So if I'm in a bullish market and I'm getting more long trades or explosive long trades, I'm still going to get into those trades. I'll just hold on for more. If it's a bigger move, it's a measured move, it might be low of the week. Whatever that is, again, come back to number one, build your playbook and add some breadth to that and expand it, but really hone in on one long trade setup, one short trade setup, and a trend trade setup. How will you recognize those? How will they present? And doesn't matter, in any window during the 24-hour clock, you're going to get an opportunity. So I would suggest prioritizing 1 to 2 hours max as trading time. Treat it like a business. So if you have office hours, set those office hours, lock it in, and only trade during those hours. The reason being is that if you're just coming to the screen randomly and hoping to catch a move, that's like, you're running in my mind, I'm running a multi-million-dollar operation. And just like the banks, they go to work, the algos kick in at certain times of the day. They have certain recognizable behaviors that are very specific to the time of day. Take advantage of that. Run your trading like a business. Don't spend hours at the screen. Like most of my trades are over in 15 minutes. And the odd level 3 trade might be a few hours. But seriously, when these trades move, they're done and dusted reasonably quick. On the majors, it may be a couple of hours, but there's no heat. They just move steadily from point to point. Look for the opportunity, lock it in, and shut it down. If there's no trade, be very, very, very satisfied that there's no trade. And you're not sitting there hoping to maybe get in anyways and just scalp something and, load up and maybe get some money, because that will end up at some point smashing you and blowing out your account. Shut it down, say, okay, cool. Go to bed or go to work, whatever that is, and have peace of mind knowing that you didn't do anything to put yourself in a destructive mental state or damage yourself emotionally as well as financially. Come back and feel like you are the master of your domain. You aren't missing out on anything. Read that again. You aren't missing out. You are not missing out. There are going to be trades every single day at different times during the day. You are not missing out. Understand that, and that is a very powerful message to tell yourself over and over again. I'm not missing out on anything. I'm quite happy to come back tomorrow, because you're going to get into something today maybe that's not your best trade setup. Do damage, bang yourself up, and then tomorrow's perfect and you missed out, or you're afraid to take it because you're beat up from the day before. You took a big loss, and if you'd just been patient and walked away, today was perfect, and you could have just, added to your trading account. Have a watch list every day, or a mechanism that you can filter things out every single day when you come to the screen. So I talked about using the Forex screener. I like to pop that up during the gap sometimes and look to see which pairs are at the highs of the day. So they've maybe moved up 1% or 2% or something like that. Or they've moved up from the close, or they've moved up from Monday's open, and it's Friday. Which pairs have been going up for 3 days? Those sorts of things, because I want to know, is something overcooked and it's about to have a reversal? Is there something that's drove down all day at the low of the week, and we possibly are going to get, maybe not in this session, but maybe the next session, a retest of a low or high of the week for a reversal trade? Little things like that. So build a watch list every day. Have some criteria. Which pairs have been running all day? Are they going to have a reversal? Are they trending? Are they all-in days? Is there going to be a pullback for you to re-enter the trend? Or has it been running all day and there's going to be traders chasing that move, and there's going to be a 25 to 50 pip stop hunt? Is there news on the calendar? Is there potentially a news catalyst opportunity? Is there been a pre-market setup? There's plenty of pre-market opportunities on some of these instruments on major round numbers. Again, I talked about the power of the closing price. Look to see who's underwater. Right away, there might be a pump and dump setup pre-market. Is there a trend trade? Reversal trades, gap time trades, high of the day, low of the day. We see those high of the week, low of the week opportunities in the gap times often. And is there a trading opportunity headed into the close? So New York, I'm in bed, but there are plenty of trades in the New York session at the end of the 3-hour window. There's trade opportunities heading into the close. Again, even if it's 15 to 25 pips, that's a very powerful trade setup. If it shows up repeatedly, you got multiple instruments you can follow. If one or two of those pairs gives you a perfect best trade setup, and there's one or two of those trade opportunities every 2-3 days, or even every day, you can take advantage of that. I'm going to walk through each one of the pairs real quickly just from yesterday. You can do this on your own. It doesn't matter. This is the euro. This is the 1 minute chart. I've got my major round numbers on there and the quarter levels. The point I want to make with this chart is that I have no idea what the other time frames were doing. I have no idea what the daily chart was doing. I don't care what other indicators are doing. All I would be suggesting is that you can witness and see the amount of back and forth movement during different times of the day. This was the Fed the night before, but we have 25 to 50 pip movements back and forth all day long in the timing windows. Off of major round numbers, we have high-low trade opportunities. We have trades in towards the close. This is a great long day on the euro, and then right into the close, there's a 25 pip scalp. There's 50, 75 pips long trade out of the U.S. session. There's a 25 pip scalp in London. There's 25 pips up in London. 25 pips up in Asia, creeping trend back down into the open of the session. This is the Euro Oz. Again, we had a huge run-up a few days prior to this, peak formation, but again, creeping trend. This is a down day, obviously, but looking back in retrospect, there's up moves, there's down moves, up moves, down moves, all throughout the day. All throughout the day, there's up and down movements off the number levels, back and forth, peak formations. British pound, we had BOE. Again, scrolling back through, there are trades in the gap time. There are trades during the session. This is the Fed again. There are trades in Asia. They may not be as big. This is news. We had BOE, high of the day. They took it up 3 levels. Bang, straight down. Retest of the low, 25 pips. Locking in a low, there's 25 back up. So there are trade opportunities everywhere. 25 pips this morning in Asia, in the pre-market, just coming off of 50. They put in a low. Trend trade back up to the high of lower level shorts from the night before. People say, well, there's too much noise on the 1 minute. I'm not suggesting to trade the 1 minute. What I'm demonstrating to you is that there are plenty of opportunities throughout the 24-hour day where the market moves back and forth. Is every day going to be ideal? Well, there's 12 hours of British pound yen where there wasn't a whole lot of movement, but eventually, bang, it breaks out. There's 25 up, it consolidates. 25 pip breakout, a 25 pip pullback, a 50 pip trend trade that kept going into the close of the session. Next day, we got lots of movement back and forth, back and forth. This is before the news. Big move down, a pullback and a retest of the low. So there's plenty of movement, again, a vertical move right off the bat in Asia. So, we can talk about hindsight and everything else. Go back and watch the first part of this video. Build your playbook. Know exactly what you're looking for. I laugh when I hear people say that. That tells me they don't have a playbook. That tells me that they're coming to the market every day with all their retail technical analysis knowledge, trying to catch a move and trade the market. I'm coming to the market with a gun, and I'm looking for that opportunity to present, and then bang, I'm going to hit the target, I'm going to lock it in, and I'm going to shut it down and walk away. As I talked about, you can keep trading, but you'll give a lot of this back. Understand a best trade setup. It may be in the gap time. There's a low of the day opportunity in the gap time. There's a trade opportunity into the close. There's trade opportunities mid-session. There's plenty of opportunities in the markets. Another vertical move this morning on Euro Yen, straight up in Asia. Retest of the high of the week. Canadian dollar. I talked about level 3 last week. We had a retest back up into that level. Day 1, day 2, up into the peak formation, broken down. First red day, continued to fall on Wednesday. Fed, and that market just continued. It's a broken down market. It just continued to fall down yesterday. So again, on the 1 minute chart, we see short trades, we see long trades. Obviously, the bias was to the downside, the weight's to the downside. There are trades in the U.S. session, scalps. There are continuation trades into the close, into the end of the night. Japanese yen has been in a screaming bullish run the last few weeks, but we can see in the last few days, again, even on a low volatility pair like the yen, there are still great short trades. This was in a up market, but it started to sort of have a creeping trend back down. We have long trades. We have short trades. We have long trades. We have short trades. So there are plenty of great opportunities. Again, you don't have to try and hit every trade. You might just be looking for 1 or 2 types of setups. You might get 10 pips on the yen and 15 pips on the pound. Perfect. Shut it down, walk away, come back the next day. Focus on what you can scale up and repeat and reproduce over and over again. Trend trade. Back in with the original trend. You can align your other time frames up with this. It doesn't matter how you do it. It has to resonate with your level of expertise, your comfort level in terms of trading, what you feel you do best, and then mastering that and then executing on that. Like there's just so much movement, and people say, well, you can't trade the 1 minute chart and blah, blah, blah. If you're going there and looking for specific setups and you study that chart, the same patterns show up on the 1 minute charts. New Zealand dollar. They come down, they put a low of the day in place, starts to come and trend back up. Moves back up into the gap time before Fed, bang, a short squeeze. Bang, straight back up for a long trade. After the news, you might get a first bounce after the news. You're not chasing the vertical move, but there's a first bounce for the continuation. The second day trade, consolidation for the trend trade. Whenever you see a consolidation, sideways movement, forming a rectangle after a big move. Again, look at major round numbers. They're forming a box between 25 and 50. Okay, they build that up for the whole day, and then bang, there's the trend move right out of the consolidation. So Swiss franc, we were at level 3. We had high of the month. And again, I talked about 3 weeks of rise. We have our first 0 week. Okay, so accumulation box, they break out. Again, geometrical patterns. Go get Peter Brandt's book. Study these patterns. That whether you're using a 5-minute, a 15-minute, the whole big geometry picture shows up. This is a breakout of a rectangle at the bottom of the month. So again, we talked about timing. Low of the month, end of February. 1st of March, they break out of that. That potentially could be the low of the month. That geometrical structure now could become a measured move of a rectangle. So if we're in that opportunity and our bias is to the long side and you're trading on the long side, there's opportunities on the long side. But even in a bullish market, you can see all the reversal shorts on the way up. They continue the move. Stop hunt down. Stop hunt down. This is a strong market. There's 25 plus pip move pullbacks. Is that a peak formation? So for people who keep saying to me, what's a peak formation? Go back, print your charts off, look where highs and lows form. That's called a peak formation. Do I know that it's going to fail and roll over? No, it could retest that. But the next day, we have an opportunity that shows up. Over the course of the day, they build that box in a bearish pattern below the peak formation for a blow-off move. 50 pips in the U.S. session. So again, you have a low volatility day inside of a peak formation. I'm not looking for a long trade chasing it back up to the high. I'm wondering if this market's going to collapse. I got a neckline. I want to know, is this market potentially breaking down? I'm at major round numbers. And again, I'm looking for simple stuff. I'm not trying to figure out and show the market how smart I am. I want to know when it walks like a duck, quacks like a duck, that it's a duck. It's as simple as that. If it's not, if I'm sitting there going, well, geez, it's this, and that, and I think it could do this, and it's going to be this, and I don't really care. I want to make money, so I'm looking for simple. When a market starts to break down, I want to be loading the boat and catching that move and locking in profits. So if I'm up 30 pips and I don't get anything out of that, I need somebody to sit down and talk to me. because I want to be making money. And making money when you're up 15, 25, 30, 45, 50 pips, you should be locking some of that in, especially if you've had a gift given to you and you've put size in the market. Take that money, put it in your account, shut it down, walk away, study the chart, review it. What did you do well? What did I do wrong? How can I do it better? If you missed out on a trade, don't beat yourself up. Why did I miss out on that trade? Should I have had an alert set? How could I have identified that that pair was going to give me a better trade or the best trade out of the group? What were the opportunities that could have alerted me to that so that next time I can pounce on that? I can trade it, I can lock it in, put it in my account, and then the next time do it better and maybe a little bit bigger and keep scaling that up in size. There are plenty of opportunities throughout the 24-hour cycle, but you need to know what it is that you're good at. You need to know what it is that you're going to trade. You need to know how you're going to trade that, what the setups are, how they're going to be skewed in your favor to actually have the edge in your favor. And then when that edge presents, how you're going to trade it in live time with confidence and skill, how you're going to lock in some profits, how you're going to maybe scale in, how you're going to squeeze the maximum out of that winning trade. So if you leave some on the table, so what? How could you have done it better next time? What could you do to be 1% better on the next trade setup? Keep getting better. Don't blow your account out. Learn to trade scalable setups. Be thankful for what the market gives you. Don't beat yourself up. Figure out how you can get better at it. Become a master of your craft. Stay focused. Keep getting better. Hopefully that answers your question, Jay, and other traders who have messaged me. The opportunities are there. Really hone in on your niche. Become a specialist in your niche. Become the shadow. Show up. Take your money. Grab the check and run. Shut it down. Come back the next day. Have a great trading session. End the week on a strong note. Head into the weekend knowing that you're on top of your game. Have a great trading session. And may the markets go.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.